Silver has always had a bit of an underdog story, hasn't it? While gold tends to hog the spotlight with headlines about record highs above $3,600 an ounce, silver is making its own quiet run. It has recently closed above the $40 an ounce threshold, making its strongest finish since 2011. Not bad for this so-called second metal. Now, before we go further, if you've ever wondered how to actually help protect your retirement savings with precious metals, Goldco has a free gold and silver kit that explains it all in plain English. It's a simple way to understand how these metals could fit into a long-term retirement plan. You'll find a link down below. Now back to silver's surge, and here's the twist. We're not just talking about retail buyers this time. For years, silver's strength has come mainly from everyday people who couldn't justify shelling out thousands for a single gold coin, but found silver both accessible and tangible. But now we're seeing institutional players enter the mix. Case in point, a recent 13F filing revealed that the Saudi Central Bank put $30.5 million into the iShares Silver Trust and nearly $10 million into the Global X Silver Miners ETF. Now sure, compared to their tech holdings, that's a small slice, but the fact that a sovereign wealth fund is allocating into silver, that's a first step in changing how silver is viewed. Analysts are calling it a potential game changer because silver has always been dinged for lacking that big league institutional support. And here's where it gets even more interesting, the gold to silver ratio. Right now it's sitting at about 86. That's down from over 104 earlier this year, but still well above the historical average of 50 to 60. In simple terms, silver is still undervalued compared to gold. And as analysts like to point out, when that ratio starts moving closer to historic norms, silver tends to have a lot more room to run. Of course, silver's market is only about half the size of gold's, which means it's far more volatile. And volatility is a bit like hot salsa. A little spice makes things exciting, but too much can leave you sweating. That's why analysts keep emphasizing that even small shifts in demand can cause outsized price moves in silver. Now, speaking of demand, retail interest is still the backbone of silver's story. Silver has been the metal of choice for people who want to diversify without breaking the bank. And with institutions finally starting to show their hand, we may be entering a new chapter. By the way, if you'd like to explore how silver could fit into your own retirement plans, Goldco is offering up to 10% back in bonus silver on qualified accounts, plus a free Ronald Reagan silver coin. It's their way of making sure everyday savers are not left behind while these bigger players shift into metals. Now let's zoom out. The article highlights that the biggest disadvantage for silver has always been its volatility and its lack of official central bank buying. Gold remains the #1 monetary metal in the eyes of banks and governments. But silver's strength is retail driven, and now, with sovereign wealth funds dipping in, that dynamic could change. So where does that leave us? Gold is still the heavyweight champ, breaking records and holding its role as the go-to safe haven. But silver's making a statement, it's accessible, it's undervalued compared to gold, and for the first time in a long time, institutions are starting to treat it as more than just an industrial play. And here's the bottom line. Whether silver eventually outshines gold or just holds its own, it's showing it deserves a seat at the table. With volatility comes opportunity, and right now, analysts are suggesting that opportunity is leaning silver's way. So hey, if you'd like to understand how to bring silver and gold into your retirement planning, start with Goldco's free gold and silver kit. Then explore their offers like the 10% back in bonus silver and that Ronald Reagan silver coin. 3 different entry points, all designed to help you take advantage of what's happening in the metals market today.